Accounting financial record keeping and reporting. Audit examination of financial records for accuracy. Balance sheet financial statement showing assets, liabilities, and equity. Cash flow movement of money in and out of a business. Depreciation allocating asset costs over time. Expense cost incurred in business operations. Financial statement document summarizing financial data. Gross profit revenue minus cost of goods sold. Income statement financial statement showing revenues and expenses. Journal entry recording financial transactions. Liability financial obligation or debt. Assets items of value owned by a business. Trial balance check of accounting accuracy. Credit record of money owed. Debit entry recording money owed. Revenue income earned from sales or services. Accounts payable amounts owed to suppliers. Accounts receivable amounts owed by customers. Accrual recording revenue or expense before cash changes hands. Amortization allocating the cost of intangible assets over time. Capital investment in a business. Cost of goods sold, COGS, expense of producing goods. Depreciation expense cost allocation for tangible assets. Dividend distribution of profits to shareholders. Equity ownership interest in a company. Financial ratio measure of financial performance. General ledger primary accounting record. Inventory goods held for resale. Journal chronological record of transactions. Liabilities debts or obligations of a business. Net income profit after expenses and taxes. Overhead indirect costs of business operations. Payroll employee wages and benefits. Quick ratio liquidity measure excluding inventory. Retained earnings accumulated profits of a company. Stockholders' equity from shareholders. Taxation payment of taxes to the government. Write-off removing a non-collectible debt from the books. Accrual accounting recognizing income and expenses when earned or incurred. Cash basis accounting recognizing income and expenses when cash is exchanged. Double entry accounting recording transactions with equal debits and credits. Financial analysis evaluation of financial data. Goodwill intangible asset representing brand value. Intangible assets non-physical assets with value. Liquidation selling assets to pay off debts. Operating income profit from core business operations. Partnership business structure with multiple owners. Reconciliation matching financial records. Statement of cash flows summary of cash inflows and outflows. Trial balance check of debit and credit equality. Depreciation expense allocation of asset cost over time. Financial planning long-term financial strategy. Inventory turnover rate at which inventory is sold. Market value current value of an asset. Revenue recognition timing of recognizing sales as revenue. Accruals unrecorded revenue or expenses. Cost allocation assigning costs to specific activities. Fixed assets long-term tangible assets. Income taxes paid on business income. Ledger record of financial transactions. Net profit margin net income as a percentage of revenue. Owner's equity owner's share in business assets. Receivables amounts owed to a business. Statement of retained earnings changes in retained earnings over a period. Tax deduction expense reducing taxable income. Depreciation method approach to allocating asset costs. Financial reporting disclosing financial information to stakeholders. Goodwill impairment decrease in the value of goodwill. Inventory valuation determining the value of inventory. Lease rental agreement for assets. Partnership agreement contract between partners. Revenue recognition principle rules for recognizing revenue. Statement of financial position another term for the balance sheet. Trial balance listing of debit and credit balances. Capital expenditure spending on assets with long-term benefits. Deferred revenue income received but not yet earned. Fixed cost expenses unaffected by production levels. Internal control procedures for safeguarding assets. Payroll taxes withheld from employee wages. Statement of operations another term for the income statement. Taxable income subject to taxation. Accounting cycle steps in the accounting process. Contingent liability potential obligation depending on future events. Dividend payout ratio proportion of earnings paid as dividends. Financial statement analysis evaluation of financial statements. Interest expense cost of borrowing money. Net book value asset value after depreciation. Prepaid expense cost paid in advance. Statement of changes in equity summary of changes in equity accounts. Tax credit direct reduction of taxes owed. Accounting equation assets equals liabilities plus equity. Accrual basis accounting method recognizing when income is earned and expenses are incurred. Book value asset value on the balance sheet. Deferred taxes deferred to a future period. Inventory shrinkage loss of inventory due to theft or damage. Revenue expenditure day-to-day expenses for operations. Asset turnover efficiency of assets in generating revenue. Capitalization treating an expense as an asset. Diluted earnings per share with potential share dilution. Financial forecast predicted financial performance.